Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, January 11th. We are halfway through the trading week, and tomorrow morning, I should say, very early, we have CPI, Consumer Price Index, which is a core inflation metric that the Fed uses to track US inflation, and it is likely going to be a very important day, considering we haven't had an important data print in over a month. And following CPI, we also have tech earnings. Well, we have we have earnings across the board. Financial, consumer discretionary, tech, energy, transportation, all the fun stuff. And then after that, we have FOMC on, I believe, the 26th of January. So starting tomorrow, going into the latter half of January, it should be, there should be some fireworks around, and we should see some more volatility. Maybe not in the direction that we saw, to start the year. It could be, but volatility nonetheless, which should create good trading opportunities. And let's go ahead and dig into where some of those opportunities may lie. So what we have right now on the charts is DXY, something we've been tracking for quite some time. We're on the 4-hour. We can see that, with that breakdown lower, we've still been hovering around that resistance level, which was previously support. So 103.4, 103.5. Still acting as resistance, but no real decision one way or the other. This could still be potential deviation back higher into the range, or zooming out on the daily, it could be a continuation to the lower end of the next support level, which would be about 101.2. So CPI tomorrow should give us, the sign on whether or not DXY is going to break out in one direction or the other, getting back into the range, potentially, breaking up here into the 200 moving average, or breaking down lower, to support and potentially lower if CPI comes in very positive. And you must remember the DXY is very inverse to risk assets, due to the fact that if DXY is higher, the dollar is higher, you can buy less assets with a stronger dollar. And if the dollar is weaker, you can buy more assets with a weaker dollar. So there's your fundamental consideration for why DXY is very important. And I would be shocked if this did not have a large move tomorrow upon CPI print. So knowing what we do about that, I have some squiggles that I already drew for the Trade the Chain community. As you know, I put my research in there every single morning as to what is likely to happen throughout the day. We're on the hourly charts, and so the first kind of opportunity is if you break above 39.50, which we discussed yesterday, then you have a good launch pad all the way up to 39.80, 39.90 for the next resistance level. And of course, if you cannot get above 39.50, then very likely to break back down to at least the previous daily close around 39.20. And if 39.20 fails, then we have support at 3900, which I would expect to react in some way, shape, or form prior to a drop back down to 38.75 or lower. So my prediction today was more or less at least, some sort of range I would expect. Although equities do look stronger than crypto today, it would make sense heading into CPI that we at least come off of the highs and consolidate into that move tomorrow. If we continue zooming into CPI, it's really kind of tough to support the narrative that CPI will then be positive and will continue higher. Typically, whatever move happens into an economic data print will end up being reversed. This is not, this is more or less just market psychology, thinking about the possibilities of what may happen where we are at within price action, because, at the end of the day, CPI numbers tomorrow are going to move us in one direction or the other. It's just more or less a guess based on market expectation, predicted values for CPI, et cetera. So while we're thinking about the idea that price action may at least stall at the current highs and potentially consolidate into tomorrow morning, we should probably at least go over CPI for what it may look like tomorrow. So on the right, we have the previous month's numbers, and on the left, we have the predicted numbers. And now you may say, well, if CPI just comes down tomorrow, why would that not just be positive in general? Typically it would, but the way that the market looks at, trading off of these prints, it's based on the expected value. So CPI year over year is expected to come down 0.6% from previous month to this month. And so if CPI comes in at 6.5% or lower, that's very positive. But if it comes in at 6.6 or higher, that is, although at the end of the day it is positive, it's not on the trajectory that it needs to be to meet positive market expectations. So then the market will likely sell off, realizing that CPI is not where it needs to be. And of course, if CPI is lower, then the market will likely head higher as risk entrants will buy and see this as a positive sign for either the Fed potentially pivoting early, inflation abating, economic progress improving. So you can kind of get the fundamental narrative of why we're looking at these numbers the way we do. So expected value of CPI is pretty much on track to get back to 2% inflation within hopefully the next year. Or 18 months. And within that trajectory, that's when we could start to discuss, are we beginning to form a bottom? Is CPI decreasing in the way that we want for the market to gain confidence to have entrants come back into the market to splash around and invest for the long term? So, although we don't really have any indicator yet, Nick Tamiros from the Wall Street Journal has kind of been our canary in the coal mine, and have not seen anything from him in regard to CPI or any sort of Fed opinion about how tomorrow may look. So we are pretty much flying blind, and we are flying blind after a large increase in risk price action since the beginning of the year. We are, what are we, the open on January 1 is right here. So we are up on Bitcoin at, at the price, at current price, we are up 5% for Bitcoin. And for equities since the beginning of the year, believe, let's find that open. Oh, we started trading on the 2nd. So good point. So this is where we opened. And now we are trading up to 2% since the open, but 4% from the lows for equities at current price. So equities, Bitcoin, more or less in line here, both big boosts following the start of the year on positive market expectations. This could also be new market entrants, coming in for a risk trade after all the suppression that we saw. So it doesn't mean that these entrants will stick around. Maybe they were just making a trade, could possibly be large fund allocations as well, but we really won't know until we see all this data come in. So now that we're looking at Bitcoin with the idea that equities will likely stall, let's check out, where we may head for the largest cryptocurrency on earth. So, zooming down a little bit to better understand our levels, we're currently sitting at previous supports, now acting as resistance because we broke beneath the 17.4 level. More exactly, it's 17,385 is the exact resistance number, and that is now going to be a contention point for whether or not we head lower. So the idea in the Trade the Chain community this morning was, if we can hold, the previous daily close around 17.4, then you can, flip that into supports and head higher up to 17.7. But if 17.4 fails, then it becomes resistance, and you're likely, dropping down lower into this range between 17.4 and 17K. And you're likely to probably catch at 17.2, which lines up with the 100-day moving average on the 1-hour chart, as well as, support for where it traded in this area on Monday and into Tuesday. So you would expect 17.2 to be some sort of reaction level if there is continued strength. And of course, if 17.2 breaks and you're down to 17. So my opinion is that we'll probably seep a little bit lower throughout the day, at least tag 17.2. Previously we said, at 17.3, we'll probably head down to 17. We didn't get that 17 tap. We got like a 17.1.2 tap. Or 17.12 tap, I should say. And, we headed higher. So there is strength, we are making higher highs. But if we also zoom out, just to make the classical reference, elevator or stairs up, elevator down. And we have stair stare, 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 and do we head up for one more stairwell, or do we end up just crashing down early on a bad CPI print? So that's really the consideration for where we're at right now. A good potential way to trade CPI if you are wholly uncertain of which direction it's going to go. What you could do, and I mentioned this on previous Trade the Chain streams before, is you open up a long on Bitcoin or a shorts, and you do the inverse on Ethereum. So if you go long Bitcoin, you go short Ethereum, you have exact equal sizing so that your risk is measured, meaning a 1.5% move for Ethereum is equal to potentially a 1% move for Bitcoin. Exactly. You have to line up where your expectations are and what your risk size is, but typically you want to line it up to where the future values will be more or less the same for the trade size. And what you want to do is, immediately upon that print, is close the trade based on the directionality of CPI. So if CPI it comes in lower than expected, you close your shorts and you stay with your long. You obviously lose a little bit on your short, but where you should make it up is on the long side after the numbers come in and the market begins to push that momentum in one direction or the other. This is a risky trade because we do know sometimes the first trade is sold off, but if CPI comes in lower than expected, I don't see the market reacting negatively at all. I think the negative reaction would then come, likely around the prints of economic or corporate results, corporate earnings. That's what I was looking for. Sorry for that brain fart. The dip, if CPI is good, the dip would likely come on corporate earnings or the FOMC print, because a higher stock market is not helping Jerome Powell. And they may, do another increase. They're likely to do another interest rate hike, and that interest rate hike could send us back down. So I'm not ready to call it elevator down yet, but we are reaching that area. CPI could be a factor that pushes us down. But if CPI is positive, I would then look for either earnings or FOMC to push us back down. When momentum gets like this, fading that momentum is more punishing than not. And as you can see, we have had some volume increases into the new year. That could certainly continue if CPI is positive, which would help drive momentum higher. So we're going to move on to ETH really quick here, but very good potential trade opportunity is the inverse trade of equal future value and closing that trade upon as soon as that economic or as soon as the CPI print comes in. So very similar for ETH compared to Bitcoin. Based on the Trade the Chain prediction, of course, we make these around 6-7 a.m. Pacific time. So the thought was if it can hold 1335, you can have a nice little bounce back up to the previous high of 1345 and flip that and head higher all the way up to 1420. We've obviously broken down pretty much the bullish trend that was moving us higher has broken down as well. Now 1335 and 1330 will likely act as resistance, and if that gets rejected, then we're likely headed back down to 1300, 1305, and of course if 1305 fails, then you're back down to 1280. For potential then another move higher. Now, if CPI comes in horrible tomorrow, meaning higher than expected, we could have that could very much start the elevator down. But prior to CPI, I would expect 1305 and 1280 to act as resistance before any larger move, as support before any larger moves happen. So I'm cautiously optimistic going into CPI because a lot of the factors around us have shown that inflation seems to be coming down, but we've been fooled before, and getting overzealous after this much of a boost into a bear market can very much hurt you. So if you don't want to take the inverse kind of trade that I mentioned, I would try and stray away from a purely directional trade, because very easy to get hurt if we have what we call a God candle. Up or down, depending on where your trade is, so it could be very good. It could also be very bad. And that's where the risk comes in for something that you are very, unsure of. So try and trade it intelligently, depending on how CPI comes in, there could be a great momentum trade. If it comes in much higher than expected, probably a great momentum trade down. If it comes in much lower than expected, probably a great momentum trade higher. So good considerations for CPI. Jason asked about sushi. Let's go ahead and pull that chart up. Let's do 4 hour to get a few key levels here. So the sushi, I mean, fantastic trade. Talk about a fair value gap right here. This was a beautiful opportunity that I, of course, missed last week, but that was a 4% fair value gap right there. So fair value gap, I mentioned that in the Trade the Chain community. I also tweeted it. Basically, when there's a gap in trading from the break in resistance to the next support level of that previous trading gap. I also mentioned this on I think maybe ETH yesterday too on stream, but when there's that gap right there in trading, as you can see between resistance and that support level, pretty much we'll just zoom and cut right through that gap and fill all the asks. So, very good trade there for those who made it. Now you are at resistance, which would be, right here, previous support. Looks like swing failure pattern higher. We have bearish divergence on the 4 hour, which has more or less already played out, but no semblance of bullish divergence. I guess there could possibly be some bullish divergence right here. So that is a potential long opportunity if you believe that there is, if you believe that support will catch at 104 on the 4 hour chart. The way I would look at that is, I would want to see another 4 hour close above that. Probably green, maybe a nice little doji down there, but 2 tweezers I would appreciate to see before long there, which, you're still waiting another, 6-7 hours on that. So zooming down to the 1 hour, you can see, definitely still some potential bullish divergence, but it's definitely waning. As you can see, kind of the touches here. So, flat price, bearish divergence. And then this is, you're sitting right on your support level for where it traded on Saturday and Sunday. So basically, if this level holds, you have a good long back up to, maybe 108, maybe 108, maybe 109 as a high target. And of course, if 105 breaks, if it goes through this 100 moving average and the 4 hour 100-day moving average, then you're very likely to head back down to, why is this zooming in? Then you're very likely to head back down to this support level right around here, which coincides with, both the 200-day moving average and the 50-day moving average in the 4 hour, and also coincides, no real confluence down there. But as you can see, if, talk about a gap, right here, if this closes beneath, the 200-day moving average, which is about 104 on the dot, 104.1042, then you're likely headed back lower to about $1 flat. So there's your trade outlook for sushi. No real signal here. We are oversold in the hourly. It does, typically, if we're thinking a bullish continuation, at minimum a good trade back to resistance. Potentially higher, but it has broken down from the kind of the bull trend. So typically you would expect it to come back down to supports around $1. So not a long for me, but your triggers for potential long or potential shorts. And of course, I don't know when you got in the trade, Jason, but if it was up here, probably good to take a little bit off and then set your stop at where you entered the trade and see if you can get a couple more basis points on that if it moves lower. So if it moves lower, it's about a 3 to 4% trade from current price. Not a bad win, but definitely a tough trade directionally at this moment without any confirmation on a support hold or support break. And if you're at 113, you're in a fantastic trade already. You're 7% up. I would highly suggest, just given where we're at, taking some off the table, setting a stop, near your support or near your entry, or potentially at resistance, maybe a little bit above resistance, 109, just in case it kind of pops up to tag that VWAP and then comes crashing down. So, good trade, Jason. Great question on sushi. A lot of volatility on this one. And we know our level 104 to, about 104 to 105. If that level starts to seep through, $1 is looking likely. So, we're over our regular time a little bit today, but we very much appreciate the questions. If you do have coin questions or want analysis on certain things, please feel free to either tag me or Trade the Chain on Twitter, or hop into the comments and ask your questions. Happy to address any questions that our audience has. And of course, if you're not in the Trade the Chain community, the easiest way to get hold of me and our research is in that Trade the Chain community. If you go to www.tradethechain.com, you can get signed up for a 14-day free trial and get in the community and start using our data, for 14 days, no risk. So good luck. Happy trading. Tomorrow morning, big fireworks, 8:30 a.m. Eastern. It's going to be a very early morning for me, but let's have some fun and make some money. Good luck, everyone. Talk to you tomorrow.